What's up? Welcome to the confluenceVC podcast. This podcast is meant to give you a personal glimpse into the next era of investors and operators. This week we brought on Kenn So of Shasta Ventures. We wanted to bring on Kenn because he recently published the most comprehensive book we've ever found on breaking into venture. Absolutely blew my mind. This was a free resource, and we've included the link in the description below for any of you that want to check it out for yourselves. Aside from that, in this talk, we cover Kenn's path into venture and the benefits of breaking into venture with a banking and consulting background, Shasta's pivot towards investing exclusively into B2B, and the Shasta Elevate program and the idea behind taking a more hands-on approach with portfolio companies.
How about we get this whole thing started with Kenn telling us a bit about his path into venture. But one thing I do want to note is that Kenn is really unique because he didn't enter into the U.S. venture ecosystem in the way that most folks do. He went to school and college abroad, and you're a first generation immigrant, no?
Yep, that's right.
Yeah, so you got to tell us how you broke down going from where you were to here, and then just break down your path into venture. That'd be dope.
Yeah, happy to. So I guess two answers. The short answer is luck. I think luck has a big part in it. And maybe the longer answer is that I said I guess immigrated to the US. So I was born and raised in the Philippines and spent most of my time in Asia, lived in Hong Kong, lived in Singapore, and worked in banking consulting. And really only moved to the US in 2017 to do my MBA at Kellogg, which I believe Tyler, your colleague, Ernest, went there too. So super duke school. So went to Kellogg, and at Kellogg, I explored a bunch of careers. I initially wanted to do consulting, figured out that wasn't for me, and then tried out different paths until I stumbled into VC. So I guess this is also another thing that might be unusual, is I didn't really know what a product manager was or what VC really was until I came to the US. So it was a lot of learning. And maybe to cut the story short is that I had to hack my way into building a network. A lot of people were telling me like it's really hard to break in without a network. So I started a club in Kellogg about AI, so called AI at Kellogg, because I was really interested in AI by way of background. And then figured out it's a great way to start building relationships, started inviting speakers from AI-focused VCs and startups, and actually have some, eventually became really good friends with some of them. And then I think it was just, the second part is just relentless cold outreach. And I feel bad for the people who I kind of stalk, but you gotta do what you gotta do.
How many people did you hit up in your process? I was doing about 40 a week for, I think, 30 weeks.
Oh, that's amazing. I don't even know. I can't count, but I do know that sometimes I'm persistent to a fault. Like the way I got my internship in Shasta Ventures, I was emailing the partner around 5 times before I eventually got a response. And that was really fun because eventually got an internship with Shasta Ventures, where I'm at now. So I did a bunch of other VC internships and really liked the job and learned the craft through those internships, and was very fortunate to break into it. And I think the international part is really tricky because I would say probably 80% of the jobs are not available to international. So that's why my short answer was like, it was really a lot of luck that Shasta Ventures just offered me to join them, even though I had this visa situation.
Yeah, they're an amazing fund. For those of us who don't know, Shasta is one of the, probably for a while, like one of the top firms in the country. Like you all did Mint in the early 2000s, killed it. And then you all, along with Kleiner, did Nest Labs too. Like you all are killers. I'm very curious. Actually, we'll get to that in a bit, but I'm gonna let you finish, and then I'm gonna get into some questions. Fantastic. I'll be jumping ahead.
Sounds good. I think that's my story. And the way I navigated is just really just a lot of hustle and just leveraging whatever I could at business school.
Yeah, dude, you like doubled down. So you did 2 years of consulting, 3 years of M&A work, and business school. You're a killer. Right. Okay, so look, one thing that I did want to know is for those who are breaking into venture or figuring out how to get to this path, what are your thoughts on consulting versus banking in terms of being prepared for the job?
I think that's a good question. It's a question a lot of people ask me. I would say broad strokes it would be banking, especially if you get into the tech group, TMT banking, because a lot of the processes, as both you, Tyler, and Clay know is that it's very similar. You go through a diligence process, you have term sheets, then you eventually get the share purchase agreements, and you always look at the capital markets for exits or indication of exit. So there's a lot of contextual knowledge we gain from banking versus consulting. That said, there are some types of consulting that can actually be very useful. So in my case, my first job was building machine learning models for banks, trying to measure their financial risk. So there was a lot of technical aspects that I actually brought to Shasta, because then it informed a lot of my thesis and interest around machine learning startups. So I think it depends on the specific experiences and groups in banking consulting that they eventually join, but broad strokes, it will be banking.
So to be clear, a lot of the folks in the Confluence community are hiring. We see tons of people who are recruiting for different positions, analysts to principal partner level. We should be hiring people out of banking. Is that what you're saying? This is on the record. Consultants are going to hate you, bro.
If someone had to choose between a banker and a consultant for a VC role, then I would go for a banker.
And then last thing to throw a wrench in that, what about someone who comes from an adjacent space like startups or something like that? Would you take a banker over all of those?
That's a good question. I think it ultimately depends on the firm and how the firm structures itself. So I think in large funds, the way they like to structure their quote unquote associate program, or the way they like to train their associates, is to give them experience with everything that has to do with managing a big portfolio. And that's where the skill sets of being a Swiss Army knife or being a banker really comes to the fore. So if you're a big fund with a big portfolio, then go for a banker. But if you're more a boutique early stage fund that likes to build close relationships with startups and help them on the ground directly, then I'd go for someone with a startup experience. So it depends on the strategy.
Feel that. Well, with that, I would love to hear your perspective on what we need to know about Shasta. You all are killers, and I think that like, while you are well known, like I still think it's under the radar just how dope you all
are. Thanks, and it's great that you actually done a lot of research. So actually, I agree that we might be under the radar, especially since we've actually refocused ourselves on focusing on B2B software.
Consumer fund. You went from consumer to hardware for a bit, and now you all are doing B2B. That's dope.
Yeah, exactly. So we have to reinvent ourselves according to where the investment opportunities are. I think at the same time also is that we're exactly not known for B2B software, even though most, if not all of our IPOs and exits are in the software space. So we're actually really good B2B investors. And as a partnership revisited what's happening in the VC landscape a couple of years ago, there was a shift towards B2B software, or the specialization. And just given where our strengths are, even though we're not as well known publicly about our B2B investments, is that we're just really good B2B software. So the partnership pivoted to just focus on that moving forward.
I know you are the AI lead at the Emerging Venture Capital Association, along with my buddy Arjo from Quickfire. And also, congrats on that. I know Arjo is sharp from my experience with him, so you must be a killer as well. Can you tell us about your interest there, what you're looking at, and then also if there's any other area that you're looking at right now?
Yeah, sounds good. I think one area I've been really interested in has been just broadly around the concept or the space of AI governance, and it kind of touches on a lot of different parts. I think this interest started from my first job in consulting, which was building machine learning models for banks, which actually is heavily regulated. So there's a lot of governance aspects to it. And now we're seeing this shift towards just broadly all the industries, because now AI is being embedded in pretty much every product category. So AI governance, that touches on ethics of AI, how do you monitor models, how do you ensure data privacy, and so on.
One sec, yeah, there we go. I think your mic is a little far.
Okay. I think I was interested in AI governance broadly, that whole space, because my first job was building machine learning models for banks. And when it comes to building models for banks, it's heavily regulated. There's a lot of assessments and audits and governance controls and processes. And this kind of shifted my interest towards seeing how this applies to all different product categories, because we're seeing a lot of calls for regulations broadly around AI, not just in specific industries. Focus in this area, and that kind of touches on a number of product categories. We're seeing now a trend for machine learning operations, or MLOps for short. And then we're also seeing trends in data privacy. So I think anything that has to do with AI governance, there's a number of product categories there is in my jam. And then
I gotta send you a company called Shield Rule if you haven't already looked at it.
oh yeah, I haven't heard of it.
Cool. It's
Tell me more about it after the call.
yeah. I'll push it your way, bro.
And then the other aspect outside of just work is I've been talking to a lot more junior VCs or VCs in general who actually started asking the questions of what's our role as VCs to think about the impact of the startups we're investing in. It's still an open question, but I think there's been an increased sensibility towards what's the ethics or potential downfalls of the startups we're investing in if the technology was used incorrectly. Really early stages, but I think it's an interesting question for us as investors as we all invest and look to support the next generation of startups.
Yeah, I definitely think that's something that we should be focusing on. Clay, do y'all think about that in Mucker? I know at GPV, we think about it a decent amount. Like our whole thought is like, if it can make the world better, we will. And we tend not to look too much at the quote unquote sin stocks. But I think when you talk about a lot of these frontier technologies, there's a ton of risk.
And I think there's the weird question, like, can we actually really think of the negative consequences at such an early stage? Because all the startups are actually, most startups are building towards a better world. So it's hard to have those conversations upfront with founders about, hey, your tech could be misused and so on. So it's an interesting thing. I'd love to hear from Clay if they're thinking about that.
Yeah, 100%. I think the stuff that we invest in is so much earlier even than what you guys look at. We ideally want to be the first again to trying to take like that 10-year view of what this could evolve into and trying to identify like any barriers or any potential risk and helping founders navigate around that. It's something we look at. But again, it's so hard when you're so early into it. It's a lot of built on narrative, but definitely something we consider.
Mm-hmm. Yeah, super interesting. So
we gotta get you gotta write a book on this stuff, man. I think what we could do maybe is utilize the Confluence community to do a survey or something like that on this and just figure out how many people are truly thinking about the net impact of our portfolios or the net downside risk of our portfolios.
Yeah.
Speaking of books, the thing that initially, like outside of your fund being dope and us just tracking you overall, is you recently put out a book on breaking into VC. And it was honestly probably the most comprehensive modern book I've seen on the topic. You want to talk about that a bit, what it encompasses and what inspired you, maybe more so on what inspired you and what's been the result?
Yeah. Actually, before I answer that, I'm curious how you found out about it.
Dude, we're Confluence moderators, man. We see every resource in VC. Famously plug, bro. Tell them about how many resources we aggregate for the community.
No, just always reading. I was trying to think when you asked that, like, how did I first hear about it? I know John Gannon shared it within his blog last week, but I tracked it down before that. I honestly think someone shared it on Twitter, maybe. And then I was like, after I was reading it, like really sparked my interest. It seemed like I've read a lot of stuff, just like short little blurbs, like how somebody broke into venture and like, I don't know, they're all kind of the same story. Like a lot of luck. It wasn't like tactical advice on like how to go about it. Your book was like way more comprehensive. Took me, I don't know, like half an hour to read through it all. And after I'd finished it, I shot it over to Tyler. I was like, yo, we need to check this out and get Kenn on. Wanted to hear a little bit more about it.
Dude, we need to get that thing published and put on Amazon as an ebook.
Yeah. I did consider that.
If you want to do a revenue off, I'll fund all the steps.
Yeah, why'd you keep it free? Honestly, like I was shocked this was free. I was like, there's so much knowledge in here. I was like, this is something I would pay for.
Yeah, I thought about it, but I thought like I got into venture by luck and just want to pay it forward since such an opaque industry to get into. And it's so hard to just know how to go about it. But I'm flattered. I think the reason why I asked because Notion doesn't have a built-in tool of tracking where the visits came from. So I'm curious how you found out about it. And also this is like a public call for Notion to build that feature. So I know where the visits are coming from. But going back to the question is I wrote it really because of the I guess the questions I'm getting as someone having broken into venture, a lot of people have been asking me about how I did it. And as I kept on answering the same questions, I thought, why not just package everything together into one book? In some ways, it saves me time, but also at the same time helps me think through and clarify the answers I'm giving into a much more succinct form. And just decided to write it down. I think I didn't initially thought of writing a full book, but as I kept on writing, it just flowed through my mind, and I just kept on writing and writing.
As I reached chapter 26, I realized that this was coming up.
Yeah. Yeah, a lot of the stuff was like, okay, which ones do I not repeat that already have like resources out there? Because a lot of people have written about it. So I was just trying to fill in the gap.
I think that it's super helpful. And I personally will be sending this to so many folks. Like I do these pay it forward calls every Friday morning with 5 to 10 kids, and usually they're trying to break in a venture. So I'm just going to start saying, yo, read this book and then call me.
I think I'm just going to do the same thing. I've had a ton of people, like whether they're in banking or consulting careers, like ask kind of a similar question, and I've just been rerouting them to your book. So if there is a way to track how many people see it, like hopefully you start getting bumps from that.
Yeah. I think I did see a bump after you posted it on the Slack channel, Clay. So really appreciate you sharing it. And hopefully, like I said, the goal was really to make it a helpful resource for people. So if you can use it to save you time and also be helpful to others, that's great.
For sure. We'll link it within this talk, and like when we send out
it on LinkedIn as well,
just so there's more eyeballs on it, if you're okay with that.
Yeah, definitely. Thanks for that.
For sure.
One thing that we didn't talk about was this platform that you all have at Shasta. I'm forgetting the name of it. Yeah, can you tell us really quickly about Elevate? And then we'll jump into our quickfire round. I think it's really dope.
I'm surprised you know about. We just recently put it on the website, so we haven't even publicly announced it. So it's amazing how much research you've done for the guests you're hosting podcast. Let's see, Shasta Elevate is, I guess, the formal program wherein the value that we're trying to bring is to help our portfolio companies scale from early revenue to 10 to 20 million really quickly. And it's about just institutionalizing a lot of the experience and knowledge that we have at Shasta Ventures, whether it's from the partners or from our founders. So we have a bunch of templates and a bunch of revenue labs. We really focus on helping companies generate revenue, so go to market. Because in B2B software, a lot of the go to market has been, I would say, professionalized, and it's a lot more stable and a lot more applicable once you teach it to other companies. So we're just trying to form a program of sorts that can just accelerate our portfolio companies with regards to these aspects. And how that has translated, interesting, even though this is more on the company building side, is that it has led to a bunch of seed investors or founders refer companies to us, because essentially what Shasta Elevate does is to do two things. One is accelerate the time to success or time to Series B for our portfolio companies, and also increase the probability of success because they don't have to do all the mistakes that our entrepreneurs or our partners have learned throughout their time in venture.
Yeah, you all have some pretty legit folks on the program. Any of them that you want to highlight really quickly before we move on?
Yeah, I'd highlight Michael Locke. He's super dope, really fun guy to work with. He basically was one of the first sales executives of Google, what is now Google Cloud. And he was there from the inception and grew it from 0 to 1 billion ARR. And just hearing him share stories of how he had to convince hotels or non-traditional industries to pay for Gmail was really fun. And there's a lot of learnings for that. How do you get people to pay for free products? And he actually referred the company to us as well. So I'd really like highlight Michael Locke.
For sure. Shout him out. We're definitely going to give him a public shout out. Okay, so Clay, you want to kick us off with the quickfire? So I know we had a lot to cover with you, man. You're a killer.
Yeah, let's do it. So can we just do these at the end? Just ask 5 questions here, and all of them are meant to be answered in 2 sentences or less. So first one we have is, what's a recommendation you hear regularly that you think is bad advice?
Finishing anything you read, especially if it's a book. I think once you read the first chapter and you don't like it, just chuck it away just to save you time, because it takes a lot of effort to read a book that you actually can't relate with.
That is great advice. Like,
That's fine. False fallacy out here for these books.
yeah. Next one, in the last year, what new belief, behavior, habit has most improved your life?
That's a good question. I think a lot of my daily habits changed because of COVID. And one of the more notable ones is I take probably at least an hour and probably on average 2-hour walks every day at night. I think it just helps me think through and sift through what has happened in the day. And I guess keeps me fit as well, losing those COVID pounds.
Yeah. All right, next one. Aside from having to say no all the time, what's the worst part about venture?
Oh, that's a good question. Saying no is really the worst part of venture. I think the second thing is just in some ways managing your time or knowing what to focus on. I think in venture, as both of it is like we have so much autonomy in what to look at. I think just choosing and focusing on one area and doing well in it is a really tough part.
Yeah, totally agree again. All right, next one. So this, again, we're going to steer everybody to read your book, but after putting together your book, you're probably the right person to ask this question to. What's the best piece of advice you have for junior VCs or those aspiring to break into venture?
Yeah, I'm choosing which one.
Also, you all are getting a preview of the topic for the next book.
Let's see. It would be finding an area or topic that you really know deeply about. I think what happens is, at least this was my mistake, is being too broad. B2B software is too broad. AI software is too broad. And as both of like, we really go down into very specific pain points and categories. And the only way to do that for aspiring investors and venture investors is to leverage your past knowledge or past experience and really hone in on it, because that's the place where you can add the most value. Find your niche especially.
100%. All right, last one here. So who's a mentor that you'd want to give credit to right now?
Oh, I think everyone at the...
Yeah, it could be more than one.
Okay.
I'd like to name.
I would say I have a lot. I think the entire Shasta team has been very nice to me and mentoring and teaching me through the ropes, especially as someone from outside the industry.
So
really,
the way Clay was supposed to, you could keep going with this one, but the way Clay is supposed to answer this one or ask this one is like outside of your team.
Okay.
No, do it. No, shout out your team, and then let's get to the rest.
I also have an answer for outside the team, but they're more like pseudo mentors in that I don't know them personally, but I listen to a lot of their podcasts, and through them I just learned a lot. One would be Eric Torenberg from their Village Global's podcast, Shane from the Knowledge Project, which has an awesome blog about how to think about knowledge, decisions, and biases. So those will be my pseudo mentors. I don't know them personally, but I just learned a lot from them.
100%. Well, cool, man. I think
you gotta ask. We gotta ask.
Oh yeah, sorry. Tyler's got one more question.
Who do you want to see on this podcast? Because this is for us bias. So like the whole point is like you inform who we bring on. Who are your favorite investors who needs to be part of the community if they aren't already? And either in or out of the community, who would you like to hear on the podcast?
Pre-partner VC, right? I would say you have to invite either Ivy Nguyen from Point72. I'm not sure if you overlapped with her.
Ivy's my homie. That is my homie.
So she's
awesome.
I
haven't even thought about bringing Ivy on. Maybe we will next week or something.
So she's awesome. Actually, I should say she's actually one of my mentors because she was one of the first person I learned about venture. Learned about venture from, and has been so gracious with her time to teach me about venture when I was still like really new to the industry. So really look up to her, and you should definitely, she's super smart too, as you probably know. So you definitely have her on the podcast. The second one will be John from Basis Set Ventures, really sharp guy as well, and really interesting background.
What's John?
John Manis.
John Manis. Okay. Yeah, I have to get into with them.
Yeah. Super smart guy. Really interesting background. So I won't spoil his background. I'll let him share it.
Cool. I mean, with that, Clay, unless you have a few other questions, I'm going to save the rest of mine for when me and Ken follow up one-on-one.
Yeah, I think that's all for me too. Yeah, Ken, I should follow up with you offline too, because I feel it'd be great to share notes and just connect again outside of this. But Until then, dude, really appreciate you coming on and learning more about you. Tyler and I, again, we'll follow up afterwards and we'll shoot it over so you can review first.
Yeah, definitely. Thanks again for the invite.
Thanks, Ken.
All right.
Huge thanks again to Ken for coming on this week. We hope that each of you are able to pick up something valuable from it. We've included the link to Ken's book in the description, and we highly recommend that each of you check it out for yourselves. For next steps, if you're an investor and have not already signed up to join, we encourage you to check out our website at www.confluence.vc to submit your info to become a member. If you have any feedback for us, please feel free to reach out directly either to Tyler at gpv.com or myself at clay@munkercapital.com. Hope to hear from you all soon.